Okay, let's have a look at the Euro US for the 1st of December. Now, this is I know the market has run 40 pips north and then comes back 32 odd pips in its retracement, but it is a terrible pattern from a trader's point of view, from a channel trader's point of view. The triggers are great, the projections are great, but the confidence in the market is at an all-time low with these sort of moves. Now, what do I mean by that? Well, the triggers are easy. There's a trigger short there. There's a trigger long here. But if we look at that move through here, there's nothing but weakness in the short run. You can see a couple of little candles push down. She goes sideways. It doubles the channel. There's your take profit. An easy 14.5 pips. There's your trigger for your long. There's nothing in there to give you any confidence that this market is going to achieve greatness in the short direction. Then it bounces, it goes up. Now, when it goes up, it bounces at the 50% where we'd expect it to, and then moves up to the top of the channel. You can see here that there is nothing inside of this move that would instill confidence in you as a channel trader predicting that the market is going to double this. So you back off and you take profit. Unfortunately, the market continues on. C-click. And you lose an opportunity of that. But you have to make a decision on the strength of this. If you had held in there and took profit there, that's a fantastic and a bold profit-taking model. But from my perspective, I don't like the start of the move here. Generally, the start of the move is the strength in the move. The very start, there should be some indecision during the move and then a strong finish as well. We do get a strong finish here, but in most cases you would have a high, a pullback to a new high. So I took a short on the close of this candle here, and this formation doesn't instill any confidence in the short either. This should have found a new higher high. Statistically, generally a move of 40 pips will find a deep pullback and then a higher high, and this market just drifted down. As you can see, the channel system is still reliable. C-click. There's your significant bounce area in that zone there. That's historically where it came from. But we bounce there, then we go back in time. There's a standout historical point. Tighten up to that. The market should bounce here. The only two candles of strength in this move are these last two just here. So once again, no confidence, no faith at this point to predict a longer move. All right, so there is a flawed night from my perspective in analysis, in the forecasting of a greater move. That's all it is. You need some level of confidence to do that. Just a blind hope that it's going to break this is hard to do. So let's have a look at the triggers. Okay, entry order should be on that high. You see the bleed off, push through and activated, and take profit down there. So there's 14 pips in there, and from my point of view I need 14 there, even though the market does do 40. Let's have a look at the long trigger though. C-click. The last channel was there. It bounced through. There's your entry order off that low. Okay, so I'm not I'm not saying this is an ideal trigger. It's a good bounce point. There's no guarantee that it is going to go all the way up. All you're looking for is an assumed bounce to this 50% line, which it does in fact achieve. Okay, on the way up, if you have more faith in this move than I would, you would be taking profit here. I initially took a short there and then bailed at break even because the pattern of this didn't look like the high of the day. I was fortunate to get out of that without any significant loss. There was 1.5 pip slippage. This candle was a bit explosive, so it knocked through my break-even position. Okay, from the short perspective, as I said, I took a short here, purely expecting, well, there's your last range. C-click, so market bounced, pulled up, bounced. There's your little pivot point through there. She reaches up. I wasn't confident, obviously, and I've taken a short on the close of that candle. The pattern that unfolded wasn't, in my opinion, a strong short. I was expecting a higher high and didn't get the benefit of that run. But if you were assessing it, your initial assessment would be an expectation of moving back down to this level. Now the market bounced through here. Go back in time, you see this one here. I would hazard my 50% there. You can see this wick, and the pullback would have you take profit a bit earlier, and that high in halfway through, just over halfway through Frankfurt, would be a very good profit-taking point if you could will your forecast to be long, to be all substantial on the bear pattern through here, which I give no credence to. All right, the channel system works, the triggers work, the trader's reliance on them is the thing in question in this analysis here. No strength, so no faith in maintained volatility in a general view of this market. Nothing particularly bad, just missed opportunities. All right, hopefully this helps you. If you did trade this session and you were confused, join the club. Hopefully this has been helpful. I will come back and trade the 2nd of December and hope that we get a more decisive market in this non-farm payroll week. Okay, bye.